The SPAC company Churchill Capital Corp IV gained traction on Wall Street after announcing their intentions to merge with EV manufacturer Lucid Motors. Based on targeting the luxury EV market and sales estimation, the company could grow to $733 billion by 2026. The merger is expected to close on the 23rd of July, with the shareholder vote to be held on the day prior. This video will break down everything you need to know about the CCIV and Lucid Motor merger. Welcome back to NewVehicleMedia, the channel that has all the latest on electric vehicles and their stock. Subscribing will allow us to update you, and likes help boost the algorithm. Comments are highly appreciated, and the best ones get featured in upcoming videos. Today's video will provide you with an overview of the merger. We'll go over the importance, why it's a big deal, and try to project the future of Lucid and their stock. With that said, let's dive right in. Overview of the merger. The merger deal between CCIV and Lucid Motors is expected to be closed on the 23rd of July, as soon as the shareholders' voting is done. This shareholders' meeting will be done on the 22nd of July in a live webcast at 10 a.m. EST and will decide the fate of the two companies. However, it is to be noted that a voting and support agreement to vote in favor of the transaction has been done by a huge majority of the Lucid shareholders. The number of people part of this agreement alone is enough to approve the merger. Lucid Motors and CCIV are planning the merger to be at an equity value of $11.75 billion. As a result of this merger, Lucid is expected to raise a sum of $4.6 billion, out of which a net cash amount of estimated $4.4 billion will go to Lucid as the proceeds. Lucid Motors has many plans for this capital. The raised capital will go towards funding its strategic initiatives, like the production and deliveries of the Lucid Air. Development of the upcoming luxury EV SUV named Project Gravity will also be done with the help of this capital raised. Lucid will also grow and expand its Arizona manufacturing facility with the money it will get through the merger. It was made public back in February that Lucid Motors entered a definitive merger agreement with CCIV. The purpose of this was to make the company a publicly traded one following an SPAC IPO deal. The price of the shares will be set at $15 per share, according to the PIPE offer, and a total IPO equity value will be estimated at $24 billion, according to the outstanding 1.6 billion shares once the merger has been completed. The market cap of Lucid Motors will be taken up from $6.9 billion up to more than $40 billion once the merger is done. It is estimated based on their current trading price of $25 to $16 per share. This slump in stock prices will be accompanied by a market cap, but analysts have the idea that Lucid's long-term projects will be able to sustain this. The importance. The deal is very important for Lucid Motors as it has some major long-term plans in store. First, deliveries of the Lucid Air to the customers in North America will begin in the second half of 2021. At first, Lucid will be producing 500 units in 2021 and then take this number up to 34,000 in the next year. This number will be taken to 250,000 by 2026 and then to 400,000 units before the decade ends. Peter Rawlinson plans that Lucid will produce up to 1 million vehicles by the year 2027. This may seem like something too optimistic, but Lucid Motors may be able to pull it off. Lucid Motors will be making a production facility in the Middle East as a part of the Kingdom of Saudi Arabia's Public Investment Fund. The EV maker has the full support of the kingdom as it will help them reach their goal of a sustainable future. Bookings for the Lucid Air was open for European countries back in January 2021, and now people in the United Arab Emirates can also book a Lucid Air variant for them. Bookings and sales figures are projected to grow after this, as the oil-rich Middle Eastern countries have accepted electric vehicles but still haven't gotten a luxury electric vehicle like the Lucid Air. In terms of revenue, Lucid projects a $2.2 billion revenue for 2022, which will go up to $22.7 billion in 2026. For a company that does not plan to go profitable in its initial phases, the merger is very important for surviving and, eventually, thriving. Future of Lucid and EV industry. It is being questioned and speculated by several CCIV investors if the increased market cap of $40 billion will be enough to sustain the EV maker. This will be a major post-merger slump in stock prices and will have its effects on Lucid Motors and the rest of the EV makers. However, it is also being speculated that such a post-merger slump for the share prices is nothing new and happens to most companies. It will just be a phase for Lucid Motors, and it will very quickly recover and rise from this. The reason behind a quick recovery from the slump is that Lucid Motors has many long-term plans that will not come into effect right after the merger, but after some time. As that time comes closer and the expansion occurs, the stock price of the company will also recover. Lucid Motors is currently at a pre-revenue state, and so are many other EV makers. The other EV makers at a pre-revenue state are trading at a ratio of 16.59 on average for price through sales. However, Lucid Motors is different from them as it will be starting the deliveries of its cars in the second half of 2021. From the looks of it, Lucid is quite successful for a company still in the pre-revenue state, as it had filled the bookings of its top-of-the-line Air Dream variant, which starts at $170,000 US and goes up to $200,000 US. Lucid Motors will not have a problem in the long run and will be able to deal with the $40 billion US market cap very easily. It will be able to do so by consistency in its performance. Lucid Motors has to deliver the promised product that is not substandard or having any kind of small issues. Also, the next EV it is making, the Project Gravity, must be an equally amazing product like the Lucid Air. Only then will Lucid Motors stay ahead of the game and beat the competition it has within it and outside it. From a broader perspective, it shows that if a company, an EV maker to be exact, has a good product that fills a market gap and has top features, it can secure investment through such mergers. On the other hand, companies that do not have a product to show are still struggling, like Lordstown Motors. This will encourage other EV makers to develop their products carefully and in turn benefit the customers. The Churchill Capital Corp is entering a merger with Lucid Motors in the form of an SPAC deal, which will make the company available for public trading. This will give Lucid the capital it needs in its initial years, where it won't be very profitable and many hurdles will be faced. Apart from that, it needs capital to develop the upcoming Project Titan electric SUV. Deliveries are the top priority for Lucid at the moment, and that is not going to be very easy without a huge capital in pocket. The merger will bring down the stock price and cause an increased market cap, but it will be sustainable as the company has long-term plans instead of short-term ones. Lucid Motors' merger going on successfully and the company thriving will be an example for all other old and new companies that the most important things for making it big in the market are to have a dream team, good plans, and an equally amazing product. What are your thoughts on the merger? Will Lucid be able to accelerate production and delivery soon after it's finalized? El Maestro commented that all CCIV investors should subscribe to our channel. We couldn't agree more. Make sure to do so to stay updated on everything going on with Lucid. If you like the video, it will help YouTube suggest similar videos to you. Thanks for watching and hope to see you in the next one.